This is Dan Max, the trading agent. This is a stock trading and recap channel that I wanted to share to the masses. In a probability game, there's no certainty. Here are my insights and predictions. Hello, everybody. This is Dan Max at EXP, aka the trading agent. Back to basics series continuation. I want to go into volume and why volume matters. I hate to disappoint people and tell them stochastics, MACD, RSI, all of their special little indicators are pretty much worthless. They just follow price. If you think of the market as a supply-demand game, you start to realize that's all it is. It's like every other market or any other product. You need demand to push up the supply. If you lack demand with too much supply, you're going to go down. It's literally that simple at the basis of it, but obviously there's a lot of variables and a lot of players in this game, and people can manipulate price action. But guess what? They can't fake volume. You can manipulate the price short term, but you can't fake volume. And when I say you can't fake volume is when the trades go through on the exchanges and they report to your trading platform, you're able to see live what the volume is, and that matters. And so I have volume here at the bottom, which is just the daily bars, but then I also have on the left, this is called volume profile, volume at price, a lot of different names, but what we're doing here is we're looking at the volume at that at prices. So each one of these bars is showing a comparative of where the volume is, and it seems very obvious that more volume is trading at this price area where I'm wiggling my mouse than say up here because it's spent more time. Why does that matter? You just have to keep it really simple. In the market, there's whales, there's sharks, and then there's the retail traders. The whales, they're the ones leading the market. Sharks are what I would call the intraday algorithms, the hedge funds trying to manipulate prices in the short term to make quick gains. And then there's the fish, the retail trader, the average person who pretends to play a game they think they know. It's no different than you and I going and playing basketball and thinking we're pretty good, but if we take our game into an NBA gym or a college basketball gym, they are going to wipe the floor with us. And that's what the difference between whales, sharks, and pros. That's the kind of level of knowledge, understanding, and sophistication. There's hedge funds out there, there's institutions out there that spend hundreds of millions of dollars to have slight advantages, whether it's time advantages or some sort of mechanisms where they can front run trades to just information. Think of it all information they can figure out and know before you, me, and the whole team of retail traders can really react. So, for example, of like retail versus pros, I've got Penn here, and I like it down here, but if you did any research about Penn before you bought this trade, you saw that before this price dropped actually last week, there was a huge spike in the puts purchase before this big drop. Somebody knew something. Again, we only can react to what we know. Unfortunately, most of us have either another job or we just can't watch every single minute. We don't have a team of professionals whose job is to design algorithms and systems that can manage and watch the market. So what we have to do is just be smart enough just to follow in the whale's wake. We're not trying to determine what the market's going to do, per se, from our own experience. We're trying to figure out what the whales are doing, because what the whales are doing, what the big money is doing, is ultimately going to reward them. And as a casino, think of the house always wins. That's what the market makers, that's what the big players are. They always win in time. They're taking off. Think of they're like the big whale that, swims through the ocean and eats all the algae and all the small shrimp. They just eat everything in its way. Well, that's what we're trying to follow, those guys, because they're the ones who are going to know what's going on in the market. And all we really are trying to do is just follow. So let's get into it, dig a little deeper. Why does volume matter? Well, volume, indicates demand, conviction, why something matters. We talked about the zone in blue mattering, and you look at it and you go, well, why do you think this area matters now? Why would you buy this, Dan? Well, first of all, Fibonacci's. If you've watched any of the previous episodes on Back to Basics, you know I talked about Fibonacci's being important because the banks, hedge funds, the institutions, the algorithms are using the natural law order numbers and Fibonacci sequencing to predict, not I wouldn't say predict, but to create price levels which where they will start acting and which they won't act on. Anyway, if you keep it simple, you can see very easily this area became important. Well, notice it's right below the biggest volume at price nodes. So this was a vacuum, but every time it got down below the volume at price, it came back up. So a lot of people would say, well, I don't even know what the hell you're talking about with the volume. Well, you notice it here. That was demand. This trend was looking like it's about to go get slammed even lower. If you came in on the day of August 4th and you saw this price action in the AM, I bet this mofo on August 5th was looking like a crash. Well, what ultimately happened? Somebody, a whale, somebody with capital, somebody with more shares than I can afford and you can afford and all of us combined, probably started buying. And that price action, what did it do? It stopped the drop. That's all you really need to know and think about. If somebody has the conviction to stop a move, they've got bullets to fire. They're the ones moving the market. And look at the irony of, it popped back up. Maybe they took some off. Maybe they didn't give a shit, but it pulls back and look what it does. Same price, boom, starts a rocket up. Now again, was this distribution up here? I don't know, but if you think about whales for the long term, if they like something at 68, what do you think they think about it when it gets below it and you blow out some of the weak hands that have been buying in the zone? If you really like something and you think it's going higher in the long term, that type of volume being unlocked is like a retailer getting his wholesale price for his inventory. The store is now reloading the shop so that they can sell to other people later. And if you think of the market makers as inventory collectors, what were they able to do on this day with the news from Portnoy? They were able to accumulate inventory at a wholesale price. So one day they can sell it to a retail buyer at a retail price. What price will that be? I don't know. How long will it take? You just have to know that they're in business to get inventory at cheap prices and turn it into wins for them and sell it at higher prices. Well, when news like that unlocks the price, now they have a basket of stock they need to do something with. That's what you need to know about volume. I don't need to look at the stochastics. I don't need to look at the RSI or the MACD to figure out what's going on. I need to look at the price action. Well, what do we notice? Big down. Next day we kind of flat and chop and we're retesting. The retest is on much lighter volume. That means that this volume was absorbed, and whatever volume was today, there's not enough sellers to really take it lower. And when the market got crushed, I was hoping to see this thing in the low mid 50s, 52, 53, and we couldn't even really budge today. If you watch the price action intraday, you can see it was just, we had a pop with the flop with the market, and then as the market got kind of uglier as the day went on, notice what happened. Somebody was buying. You had a little bit of an increase in volume there into the close, and someone bought it. So again, does that mean tomorrow we're going to be ripping higher? We're going to be at 58 or 59? No. Bottoming takes time. Tops can take times. As in, I'll say it again. Chop before the drop. Chop before the pop. What are the odds that it's like a V like this? I don't know. That was a bull trend. We need to study the past to see what's going to happen in the future. And what I was thinking was that this is some sort of formation like this, where you had like this choppy formation, and then you had a slightly lower low, then we built up to come back in. So if you think of what's happening now, choppy action, slightly lower low, now we should go higher. We have a lot of inventory available in these prices. Let me just zoom out and kind of see what's going on. And so once all these people were blown out, who were buying up in the mid to upper 70s, they capitulated down here. But notice how much time was spent down here, and then look at this candle. it tells you a lot without saying a lot. If you can look at it and think to yourself, okay, everybody who's buying here got blown out, and now the market maker has a tremendous amount of inventory lower. What do you think he needs to do with it? I mean, look at this volume. How many freaking shares is that? 48 million, 53 million shares. Average trading volume has to be somewhere around 3 to 4 million shares. So 10 times the amount of inventory now is in the hands of people who can absorb that. If you can understand and put that to your mind and think, wow, who has the ability to absorb 52 million shares? Not you, not me, not everybody on this channel, not everyone on my Discord. I mean, that type of money is big. And so that's not just a little person. So I hope this volume lesson kind of, again, I can get even to the finer points of it intraday and in general, but I hope people understand, like, this volume, if people were buying these lows, they didn't chase. They got great prices. And now that they're making slightly lower lows, do you think they're giving up on the stock? There's no guarantee, but whatever happened last week, meaning whatever happened in the reaction, somebody has a shit ton of inventory to handle. And if you look back at the history of the stock, it literally is the biggest inventory day on sale ever. So it'd be like me being a real estate agent in a hot market. All of a sudden, every house was for sale, and I wish I could buy them so I could sell them in the future. That's what's going on here potentially. So now we're identifying where to enter, where I've put out alert at 56 to 53, and if you need to stop out, you're wrong. But you can see where I'm referencing all of these old points that were bottoms, and that's all I'm using. And if I'm wrong, I lose a few points. And if I'm right, what I think is going to happen, it's going to take time and higher prices for the market maker to unload this inventory as accumulated. How high can it go? You just don't know until you go. And so if you want to draw some of the fibs from the upside to the downside, you can kind of see where everything lines up. And if they overlap, oh gosh, yeah, the 3/8, yeah, they overlap a little bit. This seems a little more fabricated, a little more premeditated. Market makers aren't stupid. Anyway, I hope this kind of stuff helps. If you're confused or you need more information, I recommend Anna Couling's VPA book, Volume Price Analysis. She does a good job explaining it. And then you get into more of the candle formations and what they mean and some more of the actual nitty gritty that I can't provide in this video currently, but I would check it out. If you don't want to learn in this game and you just want the easy answers, then you're going to become dependent on somebody else. And as long as I'm doing this, I still tell people, do what you think is best. Follow me if you want, but you need to know why you enter a trade. And if you're not willing to learn, then why are you even trading? You're just trying to get rich quick and hope that somebody tells you the best information and you decipher it correctly, which over time, I don't like to listen to other people. I want to know why. I want to be able to put this system into my personality so that I can manage it perfectly. Unless you're paying someone to tell you the answers, then ultimately you need to learn. If you're on, TradingView, StockTwits, Twitter, Telegram, whatever, getting free advice, ask these people how long they've been trading. Because, a broke clock's right twice a day. These people could be right in the short term or found some lucky little hack that works now, but the markets are always changing and evolving. And if you can't change and evolve with them and you don't understand volume, peace out. You are going to get murdered at some point. All right, this is Dan Max at eXp Realty, aka the Trading Agent. I love doing these videos, trying to help people because, again, I get a ton of questions and you got to know the basics. You got to understand why volume matters. And maybe next we'll get into what the formations with volume mean, like the individual candles, what they can signify with volume. Can they be reversal candles, continuation candles, indecision candles? Again, if you read Anna Couling's book or you Google it, volume price analysis, she'll get into the candle specifications and what the action means. Japanese rice traders started using candles back in the 10,000 years ago because they knew or they learned that it represents emotion and action. Anyway, another topic for another day. I appreciate everybody. Give me a like, subscribe, share this with your friends. Please, if you've listened to this far and you know the value in it, share it with people that can learn. Sharing is caring. Thanks, guys. Thanks for watching. Please subscribe if you like the content. Also smash the like button.
share with your friends, and add a comment. If there's a topic or stock you'd like me to give you insight about, let me know in the comment section. I'll do my best to answer your question. Thanks.